Delighted to welcome Don eCommerce Brett to the stage from Pattern.
Morning, everyone. Awesome. Maybe hand raised. Who's here heard of Pattern? Oh, wow. Normally, when I ask that question, we get about 10% of the room. So I think we're in our sweet spot here. Awesome. Well, my name is Don Brett. Very nice to meet you all. What we wanted to talk about today is really acceleration that does pay. There's a couple slides. There's about 20 slides, so I'll go fast and be on time. But I think for you all in the space of acquiring and exiting businesses, we've done some analysis on this, and there's an interesting intersection of the higher valuations are not just predicated on scale, and they're not just predicated on growth or profitability, rather. What we found is the brands with the highest correlation to exit at the highest multiple are also brands that are growing. So said another way, if we want to make the most money possible, we need to make sure that we have partners in our brands that are actually growing. It doesn't just matter if they are profitable and or they just have scale. So we'll show you some of that in a moment. But before we dive in, I just wanted to introduce myself. I talk a lot of nerdy things on LinkedIn. You can scan the QR code if you want to shoot us a note. We'll send the presentation to anyone who reaches out to us. I'll send you a reply on LinkedIn, or the team, Spencer, Conan, and Matt are over there with their hands. You can drop them a note, and we'll get you anything that is helpful for you. Anything that we share, we'll send your way. So e-commerce, again, just as you think about this, is a very massive space. There's about 20% of total retail sales are online, and we do know about 2/3 of searches start on Amazon. I don't think that's any surprise for anyone here. What we actually did, or when I say we, I mean Spencer, one of the smart kids that I hired, who's incredibly brilliant. What we did is we looked at a couple of companies, 17 public companies, and we looked at the correlation. I won't try to drain the slide, but you look at a couple of metrics here: EBITDA, revenue growth, scale, margin. Bumper sticker is the companies with the highest growth exit at the highest multiple, not necessarily the companies with the highest revenue or revenue. And as you think about this, it's really, really important that we, not only as a partner for you all, are driving, we really need to drive growth. And that's what we do at Pattern. So I'll show you a couple things with regards to our tech. But it's very, very important that as you all look at brands that you are acquiring or that you're doing diligence on, that you're ensuring that the brands have the actual capabilities to grow. So as you look at this, I think everyone knows, because again, I won't actually belabor this slide. We're about 2.5 billion. That does show up a little dark there. Sorry about that. We do about 2.5 billion in global revenue. We actually just reported our earnings. We went public about 6 months ago. We had our quarterly earnings last week. I think we grew about 45%. Stock price is down. Market's a little funky right now, but that's something else. But when you look at this, there's a couple of metrics. For us, Pattern as a company, what makes us very interesting, probably for you all, is the amount of data that we sit on. We sit on over 60 trillion data points, and we're on over 70 plus global marketplaces. So as you all think about this, potentially in your diligence, your acquisitions, or your exits, I would think about Pattern as a potential partner for you all to provide you intelligence as you're going down the path towards an exit or diligence. Here's an easy way to look at or think about how potentially we work with brands. So let me know if there's any questions on this, but we typically will start with a brand. You can see the EBITDA, let's just say, as a baseline of a baseline level of 100%. We typically look at a couple of things: OpEx efficiency. We look at logistics, incremental growth, and TAM expansion. typically, we can't guarantee this in all cases, but we typically see an EBITDA growth, again, talking about what matters for an exit, of about 10 to 20%. Does that make sense to everyone? Yep. Makes sense? Good. Awesome. Here's an example of a partner that we worked with. We had to take out the name, but this is in the private equity space, and you can see revenue at one axis and time of partnership at another point of the axis. When we started to partner with the brand was sub 20 million. When they exited, when they sold and transacted, they were north of 200 or 300 million. So again, when you think about this, it's not just profit, and it's not just scale. The company has to be growing, we found. Any questions on this? Okay, so there's two things here that might be helpful. We actually, from the 60 trillion data points, we have we have about 30 patents or patent pending pieces of technology that can be helpful for you all. So again, I'm not trying to sell anything here. And if you ever feel that way, then let me know. What we're trying to do is be helpful to folks. So this is one thing. If you shoot me a note on LinkedIn or you connect with any of us afterwards, this is one thing we'll provide for you, a brand that maybe you're working with, that you're doing diligence on. What this essentially does is provides the KPIs for a brand for geo. So we all remember, raise your hand. I don't make any blanket assumptions, but maybe raise your hand if you were here, you remember when the internet came online. Okay. Raise your hand if you were here when you remember Facebook and MySpace came online. Okay. Now we're all here as LLMs are coming online. And the way that you look at SEO from 10 years ago, that's how we're looking at what we're calling geo. So essentially how a brand ranks on LLMs. So again, if you were doing diligence on a brand, you were potentially looking to exit at any point in time, this is very, very helpful information to understand. You obviously are going to have the management team, you're going to have the potential bankers involved telling you all these things about the brand that are on the P&L. Might be helpful for you to actually understand the sentiment and market from not bankers, but from actually consumers. So to build into your thesis. So happy to share this with you afterward for your brand. Another thing we do is the 60 trillion data points we have. I didn't mention it before, but we're also Amazon's first or their largest third-party seller. So when you think about Amazon, you think about marketplaces. Obviously, this is the narrow space that we play in, and I would say we spend a disproportionate amount of time making sure we are industry leading here. So if you think about e-commerce, has anyone here heard the e-commerce equation? Oh, okay. So we think about, also, let me back up. So pattern, most people raise their hand, they had heard of pattern before, okay? So pattern, we'll talk about this later for 5 or 10 minutes, but pattern, about 10 years ago, they were a company that was buying and selling. Does everybody remember when Etsy became very popular? Okay. They were selling children's headbands. Funny enough, they were doing about $100 million of children's headbands. Well, the founder and co-founder, one of the co-founders, the current CEO, is a data scientist by training. So think about 10 years ago, the company's doing about 100 million-ish. Today, they're doing, 2.5, but barreling towards $3 billion in revenue. And the way they do it, if you talk to the founder or the co-founder, he will tell you just very deadpan, serious, it's math. Like, it's just math. And he's serious about that. So what we do is we have 60 trillion data points, 60 plus trillion data points. The e-commerce equation equals revenues, traffic times conversion times price times availability. So that's easy enough. It's think about 4 levers. Does that make sense? Okay. Each lever has switches beneath it. An easy way to think about this. So you've got traffic score, conversion score, price score, and availability. And then you have essentially sub scores that are not our opinion of a brand. It's not some creative person saying their brand looks like it needs a refresh, so we're going to give them a 5 instead of a 10. It's none of that. It's actually math driven. So we can provide this for you for a brand that you're working on or potentially thinking about selling or acquiring. Again, just drop us a note. We'd be happy to provide this for you. This is the base level of where we start when we engage with brands. Okay. So a couple of folks in the room, myself, Spencer, Matt, and Conan are over here at this table. If you guys could just maybe stand up so people can see you in case they want to talk to you later. They're the ones who put this presentation together. So thank you, team. So just really quick, I'll make sure we hit it, finish on time. I thought I had 305 slides here. No, that's the whole day. Okay, so we think about a really acceleration in 3 points: infrastructure, intelligence, and influence. So when you think about this, does your platform increase velocity or does it cap it? Do you have the right data to enable the right decisions? That's very much where we'll come in and play. And is your discovery reactive or proactive? So we'll click through here really quick. So infrastructure. So obviously, easy way to think about this. Marketplaces, you expand the TAM. I'm sure that makes sense to everyone. Logistics, typically the way you will drive improvements in EBITDA. And then tech, you boost the top line. So I'm sure this makes sense to everyone. The way that we think about this, again, where we're at is we're global. We're a global marketplace accelerator. I would say we're probably the biggest, but we're in not only the Americas, but Europe. I won't read everything here, but we're global in nature on 60 plus global marketplaces. Logistics, just to maybe double click on this, this typically can be, it is a very non-sexy, no offense to any logistics people in here, but this is a very non-sexy area of the business, but it can be the most attractive from an opportunity to drive EBITDA expansion. This is something that Pattern offers for brands. Again, an easy way to think about Pattern, because nearly everybody raised their hand. They had heard of Pattern, but our business is the wholesale model. We buy and sell on marketplaces on behalf of brands, and we do everything from beginning to end. This is an area typically that would drive the biggest improvement in EBITDA as you think about it from your perspective. Also, you have tech to drive revenue. We do about 16 million bid optimizations per day. So if you think about that, there's no amount of humans, no amount of hands on keyboard that anyone could deploy to match that without tech. So as you think about this and you think about Pattern, again, this is not a sales pitch, just to be informative. Whoever you're speaking with, also, as you're digging in, make sure that they are deploying tech in a meaningful and scalable way. Intelligence, the point 2 of 3. Again, we sit on 46 trillion data points. I won't read everything here, but everything from algorithmic key bidding to budget management to image archetyping. This is what we do in and day out. This is kind of the unsexy, beautiful basics that help us drive the growth that we do as a company. And then influence. Who here's looked on TikTok this morning? Raise your hand. Nobody. Who here's children do you think looked on TikTok this morning? Okay. Maybe the rest of folks don't have kids. This is where everybody's at right now. And it is influencing a huge portion. What we're seeing, a high level of correlation of growth from TikTok to then Amazon. And what we're also seeing is because a lot of people go on TikTok and they don't actually buy on TikTok, but they look for research and then they actually transact on Amazon or another global marketplace because they can return items, they get it quickly, et cetera, et cetera. But this is an area where we've actually made some recent acquisitions. An acquisition a couple of months ago of a company called Next Wave, and they are incredible. So just as you think about this, this is an area where we spend a great deal of time as a company. Again, no surprise here. The halo effect is real. So just as you're thinking about this and you're talking to brands and you're in your pursuit of what you're doing day in and day out, we find a high level of correlation. And then obviously, we're focused on with this space, who we're targeting, what grabs their attention, why do they care? And ultimately, again, going back to the point earlier, let me ask another question. Who here, so we had about a third of the room or a quarter of the room actually said they were on TikTok this morning, and about a little more than that said their kids were on. Who's been on chat or an LLM this morning? Okay, so that's about 2/3 of the room. So also what we do is we help brands understand the traffic that's coming from LLMs. Because again, this is a bit, just to be totally transparent, without technology, this is a bit of the Wild West today with LLMs and brands understanding the sentiment and ultimately the impact the sentiment could have on the valuation of the company. So again, as you dig in, if you have questions about this and kind of your day in and day out, and if you would like someone to partner with you, we're happy to be helpful. You can reach out to me. You can reach out to any of the other members of the team that stood up, which are Spencer, Matt, and Conan in the back. And again, if you drop us a note, for a brand that you're working on, happy to provide you a scorecard for either the geo or the general scorecard that we mentioned. And I think they said no Q&A, and I can't see actually how long we've been talking. So I'll cut it there.